What if I told you the world is not actually broke, but trapped in a financial illusion built on promises, interest, and invisible power? What if the trillions your country owes, the debt politicians fight about, the debt you hear on the news, isn't owed to a single country? Not China, not the US, not the IMF. What if the real answer is far stranger and far more hidden? Because behind every national debt, every crisis, every bailout, there is a small circle of powerful institutions, investors, and entities who quietly collect interest from entire nations, and almost nobody knows who they are. Today, we're going to uncover who actually owns global debt, how the modern debt system was engineered, why every country is drowning in it, and how this structure became the most profitable machine ever created. Stay to the end, because once you understand who nations really owe, you'll never hear the word debt the same way again. Before we reveal who profits from global debt, we need to understand how we got here, because the debt system we live in today didn't appear by accident. In the early 20th century, countries funded wars with taxes and gold reserves. If a government didn't have gold, it couldn't spend much. Debt existed, but it was small, controlled, and usually temporary. Then everything changed. To world wars, collapsing empires, and the rise of central banks created a system where money was no longer tied to gold, but tied to debt itself. Governments realized something powerful. If money can be created out of nothing, and governments can borrow that money from central banks and investors, then debt becomes the fuel of the economy, not a burden, not a curse, but a business model. By the 1970s, when the US officially ended the gold standard, a new financial world was born, one where countries borrow endlessly, investors lend endlessly, and the system grows endlessly, until something breaks. But here's the twist. Despite what people think, one country does not hold another country's debt. The reality is far more complex, and far more profitable, and the real owners of global debt benefit no matter which country wins, loses, defaults, collapses, or rises. We'll expose them soon, but first, we need to understand the timeline, the origins, the rise, the breaking point, and the fallout, because only then can we see the full picture. Our story begins right after World War II. Europe was destroyed. Asia was in ruins. The United States was the only industrial giant left standing. To rebuild the world, the Bretton Woods system was created in 1944. This system established the World Bank, the International Monetary Fund (IMF), the US dollar as the global reserve currency, and a structured system of lending. This was the moment when national debt became normalized. Poor countries needed loans from the IMF. Rich countries needed loans from private investors. Governments needed loans to rebuild roads, cities, and militaries. Debt became the oxygen of the new world economy. But here's where the addiction started. Governments discovered that issuing debt, selling government bonds, was a cheap and easy way to fund wars, build infrastructure, stimulate the economy, win elections, and avoid raising taxes. Instead of spending money they already had, they simply borrowed it from someone willing to lend, and lenders were more than happy to oblige, because lending to governments is the safest, easiest, most profitable financial business ever invented. By the 1960s, global debt reached around $1 trillion. By the 1980s, $5 trillion. By the 2000s, $30 trillion. Today, the world sits above $300 trillion in debt. But who holds that debt? Who is earning interest from entire nations? We're getting closer. Around the 1980s, something dramatic happened. Debt stopped being a tool and became a global industry. Two financial revolutions changed everything. 1. The rise of global financial markets. Investors around the world could now buy and sell government bonds in seconds. 2. Deregulation of banks and capital flows. Banks were no longer limited in how much they could lend, borrow, or invest. This transformed national debt into tradable assets, just like stocks. And suddenly, owning a government's debt meant guaranteed interest, low risk, high liquidity, and global demand. Investors loved it. Banks loved it. Banks loved it. Governments became the ultimate customers by now. Pay later. Debt became the world's biggest business. But this system came with a hidden consequence. The real power over nations shifted from elected officials to the people who fund governments. And those people are not who you think. Every addict eventually hits a breaking point. For the world, the warning signs appeared multiple times. 1980s Latin American debt crisis, countries borrowed too much, interest rates shot up, and they collapsed under their debt. 1997 Asian financial crisis, lenders pulled money out of Asian markets, currencies crashed overnight. 2008 global financial crisis, banks and governments were drowning in debt from risky financial products. European debt crisis 2010-2015, Greece, Portugal, Ireland, and Spain were on the brink of collapse, saved only by emergency loans and painful austerity. 2020 to 2024 pandemic-era, governments printed and borrowed record-breaking amounts to keep their economies alive. Each crisis revealed the same pattern. Governments depend on debt, banks depend on debt, investors depend on debt. But dependence means power, and the lenders, not the nations, hold the ultimate leverage. Today, global debt is so massive that it exceeds the total wealth of the planet. Countries don't pay off debt anymore, they roll it over, borrowing new debt to pay old debt. Think about that. If a private citizen did this, it would be called insolvency. When a country does it, it's called monetary policy. But here's the most shocking part. The largest holders of global debt are not countries, not China, not the US, not the IMF. The true owners are far more distributed, hidden, and powerful. Let's finally reveal them. So, who does the world actually owe trillions to? The answer comes in 4 layers, each more surprising than the last. Layer 1, domestic institutions, the majority. Most of a country's debt is held by its own citizens, but not in the way people think. Domestic holders include pension funds, insurance companies, mutual funds, banks, retirement accounts, corporate treasuries. These institutions buy government bonds because they are safe and stable. In many countries, more than 50% of national debt is held domestically. So, ironically, citizens indirectly fund their own government through their savings, and governments owe interest to their own population. But who controls these institutions? That brings us to Layer 2. Layer 2, foreign investors and sovereign wealth funds. These include foreign central banks, international investment funds, global banks, large corporations holding reserves. These players buy government bonds to stabilize their currency, hedge risks, or earn safe returns. China, for example, holds hundreds of billions of US debt, but that's less than 5% of total US debt. Which means the idea that America owes everything to China is mostly a myth. But we're still not at the true center. Layer 3. The big 3 asset managers. Here's where things get interesting. 3 companies dominate global investment: BlackRock, Vanguard, State Street. Together, they influence over $25 trillion in global assets. They own shares of nearly every major corporation, and they hold massive amounts of government bonds. These firms aren't the final owners, they manage money for others, but they control where that money goes. Their influence is so large that some economists call them the silent superpower of global finance. But even they are not the end of the chain. There is one final layer. Layer 4, the ultimate owners. Private wealth, pensioners, and institutions. Here is the real truth. Global debt is ultimately owned by millions of pensioners, retirees, workers saving for the future, insurance policyholders, mutual fund investors, corporations managing reserves, wealthy individuals, foundations, banks and investment firms, and even governments themselves. In short, the world owes debt to a vast, interconnected financial system made up of people, institutions, and investors, not a single nation. No one country controls global debt. No one person. Not even a small group. It is a distributed empire of lenders and savers. A network where money flows endlessly from governments to investors in a cycle of interest, borrowing, and refinancing. This system is so complex that no central authority truly controls it, and that's what makes it both powerful and dangerous. Now let's connect this to our present moment. Today, the world owes over $300 trillion, the US owes over $34 trillion, China owes over $14 trillion, Europe's debt levels are near historic highs. Developing countries owe so much they may never escape it, and yet, investors continue buying government bonds because they believe governments will never collapse. The system is built on confidence, and confidence is built on fear of the alternative. If lenders stop lending, the financial world collapses. So the system continues. Governments borrow more, investors lend more, central banks print more, debt grows, currencies weaken, inflation rises. And the cycle repeats. This is the repeating pattern of the last 100 years. But how long can it last? That brings us to the final section. Takeaway 1. Debt is the foundation of the modern economy. Everything around us, roads, hospitals, schools, armies, is funded by borrowing. Debt isn't a bug in the system, it is the system. Takeaway 2. The real owners of global debt are hidden in plain sight. They are pension funds, investors, banks, corporations, and everyday savers. You might unknowingly own government bonds through a retirement account, a mutual fund, a pension fund, an insurance policy. You are both a taxpayer and a lender to your own government. Takeaway 3. The system works. Until it doesn't. As long as confidence remains, the machine keeps running. But if interest rates rise to high, debt becomes unpayable, investors lose trust, or inflation spirals, the entire structure could face a reckoning. We're closer to that moment than ever before. The world has built a financial system where debt is infinite, but resources are not. Debt grows forever, but economies don't. So the real question isn't who owns the world's debt anymore. It's how long can this system survive before something fundamental has to change. And when it does change, what replaces it? A new currency system, a reset, or something we haven't seen yet? Only time will tell. If you found this breakdown eye-opening, hit the like button. It helps this video reach more people. Subscribe for more deep dives into global finance, hidden history, and the real forces shaping our world. And comment below. Do you think the global debt system will collapse, or keep expanding forever? Your thoughts might become the topic of our next video.